Welcome to the Price Action Trends and Momentum segment of Stock Trading Ninja, how to win 9 out of 10 trades. I'm your instructor, Frank Bunn. The purpose of this segment will be to learn how to quickly and easily determine price action trends and how to analyze momentum and to use price trends and momentum to add specificity to your setups and systems. This will facilitate quick, decisive analysis and create homogeneous samples where you will be able to repeat the process over and over again with similar setups. We will begin with price action trend analysis. In order to understand this, we will have to first learn about how to define pivot points. A low pivot is a low in price where the low is less than the previous interval low, and that low is also less than the next interval low. You can see an example of a low pivot here in the chart graphic. This is a comparison of the most recent 3 lows. Here's an example of a low pivot in an actual chart. Next, we have the high pivot. A high pivot is an interval where the high is greater than the previous interval high and also greater than the next interval high. We can see an example of a high pivot here in the chart graphic. This is a comparison of the most recent 3 highs. Here's an example of a high pivot in an actual chart. Notice the high pivot high is higher than the previous interval and also higher than the interval which succeeds it. Pivot points are confirmed when price exceeds the most recent high or low prior to the pivot evolution. We could see an example of a confirmed low pivot in the chart graphic in the middle. The pivot confirms when price exceeds the previous high. We can see an example of a confirmed high pivot in the chart graphic on the right. When price breaks lower than the low which precedes the pivot is said to be confirmed. Confirmed pivot points can be used for trade management and stop placement. Basic trend analysis for uptrends requires that we have either a series of higher high and higher low pivots or a sequence of 3 or more higher high and higher low intervals. In chart graphic A, we see a series of higher high and higher low pivots. In chart graphic B, we see a sequence of 3 or more higher high and higher low intervals. Basic trend analysis for downtrends states that we need either a series of lower high and lower low pivots or a sequence of 3 or more lower high and lower low intervals. In chart graphic A, we see a series of lower high and lower low pivots. And in the chart graphic B, we see a sequence of 3 lower high and lower low intervals. Here's an actual chart example of price action trends. Beginning on the left, we see an example of a price action downtrend with lower low and lower high pivots. On the right, we see an example of a price action uptrend with higher low and higher high pivots. You will learn how to use these price action trends to select high probability setups in just a moment. First, we will continue with momentum analysis. Deviation in primary contextual trends is relentless. Therefore, we must have a simple, easy tool to determine momentum and a way to gauge expansion areas within the primary trend. Expansion can most easily be measured by one average of price moving away from another, and is easily spotted using the MACD indicator as a favorable or unfavorable momentum tool. Let's take a look and see how this works. On the MACD indicator, oscillation around the signal line determines momentum. Therefore, the trend, either price action or contextual, is either favorable or unfavorable. Here's an example in a primary contextual uptrend. Momentum is unfavorable when the MACD is below the signal line, and momentum becomes favorable when the MACD begins to trade above the signal line. Let's reverse this for downtrends. Here we see a primary contextual downtrend with favorable and unfavorable MACD environments. In the case of a downtrend, when the MACD is greater than its signal line, we have unfavorable momentum, and when the MACD oscillator is below its signal line, we have favorable momentum. There are several MACD parameters which may be used in order to sort and select trade entries. As a rule of thumb, the 12 and 26 period MACD with the 9 period EMA signal line is generally used for short-term momentum. The 18 and 50 period MACD with the 9 period EMA signal line is used to determine the intermediate term momentum, and the 50-100 period MACD with the 9 period EMA signal line is used to determine long-term momentum. To couple the swing high-low impulse pattern with momentum, ensure that momentum exists at the time the swing high-low pattern evolves. In the chart graphic on the left, we can see that the swing high pattern evolves with the MACD greater than the signal line. In the chart graphic in the middle, we see another swing high pattern where the MACD is already greater than the signal line at the time the pattern evolves. In the short example chart graphic on the right, we see a swing low pattern evolving and the MACD less than the signal line at the time of that swing low evolution. As a method for sorting momentum, you may consider the momentum power sort. Sort setups by the first reaction, which is the swing high or low impulse plus price pattern, after the MACD crosses the signal line up or down. In the chart graphics here, we can see that the swing high and swing low reaction is the first reaction after the MACD has crossed the signal line. The trend and momentum objective is to add contextual specificity to systems, ensuring that your price action trend precedes the setup and that momentum is in effect at the swing high-low pivot. Here's an example of the trend and momentum objective on a 350 EMA system. To the left, we see that there is a specific price action uptrend which precedes the pattern into the low-risk setup. Also note that strong momentum is in effect at the swing high evolution. Here's an example of the trend and momentum objective for a short entry. To the left, we see a price action downtrend which precedes the pattern, or a series of lower low and lower high pivots, at which point we have a low-risk setup using the 618 system. Notice also at the bottom that momentum is in effect at the swing low evolution. The key to impulse pattern recognition is setting up the same structure and context over and over again. This makes scanning and analysis quick and routine, and the decision-making process easier. Couple price action trends and momentum with your setups to achieve similar structure and context in your trade samples. Experiment until you find the process that works best for you. Consistency will follow. This concludes the price action trends and momentum segment of Stock Trading Ninja, how to win 9 out of 10 trades. I'm your instructor, Frank Bunn.